Anurag Patel is asking that I'm a 26-year-old investor. As the markets are currently irrational, we are expecting a crash in next 6 to 12 months. I have gold and negative beta debt fund in my portfolio to hedge the same. But looking at the current market situation, I'm unsure about the proportion of gold and negative beta bond in my portfolio. You are 26-year-old and you have a great hypothesis. And I don't understand all this. What I understand is, it's very difficult to predict what is going on. And it is very difficult to predict the short-term direction of the market. I will still go with, an asset allocation. I would like to be guided by asset allocation. Fortunately for you, Anurag, you are 26-year-old. And I hope that, you have meaningful accumulation, but I also think that, if you're earning and saving an investment, you don't have sizable allocation. You may not have sizable allocation if you have been investing for last 2-3 years. It is important to maximize your return when you have nothing. So have an allocation which is suited to that. And the markets will turn around. Whether it takes 1.5 years, whether it takes 3 years, it'll justify and it'll roar, and different kind of companies will make a big comeback. We will be on a growth path. And it's investing in equity. We should not forget that it is a general bet on our economy. Will we be better off from here on? Notwithstanding this crisis, which is holding us back, and it has actually destroyed our premise to plan or expectation or the hope that when we will get past this. But beyond this, but we should at some point. And after that, we will, whenever we get back on track, companies will prosper, and companies will start making more money and grow. And a lot of fluff will be out of the market. A lot of companies will, mortality of companies will also be a good news in a sense that the efficient, the better ones, they will thrive. And that is capitalism. That is something which will happen. And I think, we have, based on, basis of what the recent regulatory changes, many changes that we have seen in the last 4 or 5 years, I think, we are a better configured capitalist society, or for the businesses, from a business point of view. So I would say that work on an asset allocation. Maybe if you want to be an active investor, go with the asset allocation and rebalance it more often. Have some allocation to gold and think of gold as an insurance with your premise. But don't do over engineering with this portfolio, because it is important. I know very simple principles that you have to remain invested in the market for the big jump which comes with a surprise. And there is absolutely no way around it. If you are looking at market on a day-to-day basis, you were saying that the market is irrational. Markets are always irrational. When markets actually tank and go down in the dumps, and it looks like when the dividend yields are zooming, and you just don't, and it looks like the world is coming to an end and all businesses will die. That is also irrationality. So I would say that markets will remain irrational. You have to define a rational way of navigating this market, and you have to base it on things that you can control, not things which you see, because there could be absolutely no correlation. And I would say that read my next column on value research online, where I have recently read that book and discovered that we try to base on these, we try to make our assumptions about correlation between what we think and how we behave and the result of that. And it could be completely unconnected. So read it. I think it will be an interesting reading.